Alan Levinson, what is your outlook for economic growth in 2013? Where will GDP be? And how will it flow over the course of the year?
Well, things are going to get a little better next year than this year. This year we're doing 2% GDP growth. Will be about 2.25 or so next year. Getting stronger as the year goes on. The expiration of some tax policy is going to weaken the economy, in particular in the first part of the year. But as we move through that, I think that you'll see growth get up toward maybe 2.5% by the end of the year.
And what about unemployment? We've been flirting with that 8% mark for a long time. We're going to get significantly above it or below it?
Well, the direction will be down, but the progress is going to continue to be slow. We're around 8% now. We'll move towards 7.5% by the end of next year.
And what about interest rates? We've been below 2% on the 10-year Treasury for a while now. We're going to get below 1%, or is it going to finally get back to a more normalized level?
I'm going to almost say neither. I don't think that there's a lot of downside for interest rates here, because I think the economy is getting better, and so risk appetite should improve somewhat. At the same time, the Fed's buying a lot of Treasury securities. There are going to be safe haven flows because of instability in the rest of the world. So the direction is going to be up, but not with a lot of conviction.
Fed Chairman Ben Bernanke said he's going to keep buying Treasuries. Is he on cruise control for the remainder of this year as well as 2013?
Well into 2013, because this program of $40 billion a month of mortgage-backed securities, and they're doing $45 billion a month in Treasury securities, and I think they'll continue that through next year, is conditioned on employment growing steadily at a rate sufficient to bring the unemployment rate down for several quarters, in my view. He wants to see that pace sustained. That should be 150,000 jobs a month or more. So I think they're going to keep up that pace of purchases at least through the middle of next year.
What about China? Will China keep pace? One of the big discussions in 2012 was whether or not China is slowing. Another big discussion is whether or not China is a bubble. What's your view?
Well, I think that China had an unsustainable rate of investment of 50% of GDP. They've had very rapid credit growth over the last few years. There are some bad loans in their banking system that are going to come due, not next year. The issue in China, though, is that for most of the last decade, they were growing at 10%. They've shifted down to 7%. Don't expect a rebound to 10. That's not what they're trying to do. If they can keep growth at 6 or 7, and that's sufficient to have the unemployment rate stay where it is and not rise, that's all we're going to get from China.
Another thing which kept the lid on growth in 2012 is Europe's problems. We saw that reflected in U.S. stocks, earnings and sales, as well as Chinese. What will happen in Europe in 2013? Will it once again weigh on the rest of the world?
Yes, and I don't think the weight is going to increase, particularly on the U.S. We've insulated ourselves in terms of financial sector transmission, but the thing that we can't stop is that near recession conditions in Europe, slower growth in China, means there's less demand for our exports. And so we've seen almost a stoppage of growth in exports in recent months. I think things will get a little bit better next year, but that growth is still going to be pretty tepid.
Putting it all together, what are your expectations for U.S. stocks in 2013?
Well, I don't call the stock market. I think profits growth is slowing, but I think our general view is that stocks are reasonably priced and that there's some room for multiple expansion as the recovery proceeds.